Everyone talks about crypto gains, but nobody shows you the receipts. Today, that changes. I'm about to show you exactly what happens when you stop gambling and start using systematic research to identify opportunities before the masses even discover them. 515 picks, 86% win rate, 347% average peak return. These are the actual results from applying disciplined frameworks to gem opportunities over 2 years. Let that sink in for a moment. That's right, over the past 2 years. Whenever we've called a gem in the Gems Uncovered live session, it's gone up 86% of the time. We're not talking about a few lucky calls or cherry-picked winners. This is across 515 different opportunities, spanning bull markets, bear markets, and everything in between in a 26-month time period. An 86% win rate means that more than 8 out of every 10 projects that we've identified using our research framework deliver positive returns. But it's not just about being right, it's about the magnitude of those wins. With an average peak return of 347%, we're talking about turning every $1,000 invested into $4,440 on average at peak performance. Some gems have delivered 10x, 20x, even 50x returns when market conditions align perfectly. These aren't hypothetical backtests or cherry-picked historical data. These are real calls made in real time, documented and tracked consistently over 26 months of active market participation. These results have been audited by a third party called Conquest Investment Advisory, licensed under the German Securities Institutions Act that specializes in financial controlling and verification. Their core expertise lies in the meticulous validation of the performance data presented, ensuring the highest level of accuracy and credibility. It means that through volatile crypto winters, regulatory uncertainty, market crashes, and explosive rallies, the framework has proven resilient and consistently profitable. The difference between gambling and investing in crypto comes down to process. Anyone can get lucky once or twice, but maintaining an 86% success rate across 515 picks? That only happens when you have a systematic, repeatable approach to identify quality projects before the broader market catches on. This track record is proof that disciplined research, proper risk management, and structured evaluation frameworks can generate exceptional returns, even in one of the most volatile markets in existence. If you had gotten in and then got out at the peak of every single asset, which is very unlikely, but the point still stands, you'd be up 344%. That's an average 97.5% annualized returns. Most people will still see these numbers and think, impossible. That's because most people have never operated where the real opportunities exist. Here's a poll we shared with our community. Just after a few minutes, we were getting these votes of more than 30 members sharing which token they purchased and secured a significant win in. Now, before we dive into numbers, let me be completely transparent about what this data represents. Over the past 2 years, we've tracked hundreds of early stage projects that we call gems, tokens identified through systematic research in native markets. We've monitored their performance from entry to current prices, documented both successes and failures. This isn't cherry-picked data showing only winners. It includes every single gem entry we've ever made, the failures, the moderate successes, and yes, the extraordinary winners. Understanding the full distribution of outcomes is crucial for setting realistic expectations and managing risk appropriately. Remember, these results come from applying consistent research frameworks, not random selections. They represent what's possible with discipline and process, but they're not guaranteed for anyone. Markets change, opportunities evolve, and past patterns don't always repeat. With that critical context, let's examine the data. Disclosure: native markets are extremely high risk. You can lose 100% of your investment. Risks include total loss of capital, smart contract vulnerabilities, hacking, phishing attacks, rug pulls, extreme volatility, and permanent loss of funds due to user error. Past performance is not indicative of future results. Any returns mentioned are not typical and should not be expected. Most investors in native markets lose money. Success stories represent outliers, not average outcomes. Only invest what you can afford to lose completely. Consult qualified financial, tax, and legal advisors before making investment decisions. By continuing, you acknowledge these risks and accept full responsibility for your own decisions. We bear no responsibility for your financial outcomes. We've analyzed the results of our cryptocurrency gem picks to understand how they performed in the market. The following breakdown reveals not just our overall success rate, but the quality and magnitude of returns across our entire selection pool. Here's what the data tells us. This data shows the performance distribution of our gem picks as of October 20th, 2025. We've made 39 new gems entries during this period. Let me break down what happened to these positions. 86.67% of our selected gems showed a positive gain, 0% or higher, meaning the vast majority of our picks went up in value. 62.22% gained at least 20%, demonstrating that more than half exceeded modest growth thresholds. 55.55% achieved 50+% gains, showing over half of our picks experienced significant appreciation. 31.11% doubled in value. 100% returns, meaning nearly a third of our selections were moonshots. 24.44% tripled, 200% plus gains, with almost a quarter delivering exceptional returns. 13.33% quadrupled or better, 300% plus gains, representing our most explosive winners. In simpler terms, we picked 39 gems total, about 34 gained value, 24 gained at least 20%, 22 gained at least 50%, 12 doubled, 10 tripled, and 5 quadrupled or more. This shows a strong hit rate, with the majority of our picks generating positive returns and a solid portion delivering substantial gains. The win rate, meaning positions that are at break even or better, is 86%. This might seem impossibly high, but remember, these are recent entries in a favorable market environment. Don't expect this win rate to continue indefinitely. Markets cycle, and periods of high success are often followed by more challenging conditions. Here's where it gets more granular. 69.2% of these entries achieved at least 20% returns. 41% exceeded 50% returns. These aren't life-changing gains on individual positions, but when you understand position sizing and portfolio mathematics, consistent hits at these levels compound into significant wealth creation. Now let's zoom out to see the bigger picture. Over approximately 2 years, 26 months to be precise, we've made 515 total gem entries. This larger dataset gives us more reliable insights into what systematic native market participation actually yields. The average return if you bought during our gems entry and held without any further action, which isn't smart because we keep repeating that native market gems are short-term plays, but the number gives us a baseline. It is 14.64%. This might seem modest, but remember, this includes entries from 2 years ago that have been through multiple market cycles, crashes, and recoveries. Many positions that were up hundreds of percent at one point in time are now flat or down, which is why taking profits matters. The average percentage change to all-time high is 347%. This massive gap between current returns and peak returns illustrates the volatility of native markets. Projects can explode upward, giving you opportunities to take profits, then crash back down. If you don't systematically harvest gains, paper profits evaporate. The overall win rate across 2 years is 85.6%. This is more representative of what to expect long term. Roughly 1 in 7 positions loses money, but the winners more than compensate when position sizing is managed correctly. The distribution of returns tells the real story. 74.7% of entries achieved at least 20% gains at some point. 65.4% exceeded 50%. 47% more than doubled. 28.9% tripled or better. And 21% quadrupled or better. Think about what this means mathematically. If roughly half your positions double and a quarter triple or better, while only 14% lose money, the overall portfolio mathematics works strongly in your favor, but only with proper position sizing. This distribution is why we emphasize never putting more than 10% of your portfolio into these opportunities total, split across multiple positions. Within our track record, we've had multiple picks achieve exceptional returns. I'm talking about positions that return 20 times, 50 times, even 100 times the initial investment. These aren't common, but they're not unicorns either. When you systematically evaluate hundreds of opportunities, you position yourself to catch these outliers. This takes skill and massive experience. This skill would require anyone many years of experience to hone. if they were developing them themselves. But you're not. You've made the remarkably wise decision to become a decentralized Masters member, and in doing so, you're able to shave a majority of the time investment required to achieve that level of skill. You have the opportunity to learn from Tyler, our head of research, and our mentors directly. Tyler's skill is indeed extraordinary, but it's something you can achieve in a fraction of the time it took him. That's what the purpose of this community is, to fast-track your path to success through knowledge and the experience of experts. In time, you can come to see the same potential Tyler saw with Thena on September 7, 2023, after which Thena soared 4,067%. Or Turbo, which Tyler found just 1 month later, which skyrocketed 12,858%. Or what about Ohm? Tyler found and shared this one a couple months later in January 2025, and it shattered through a gain of 9,004%. Or even Mix, which Tyler found in June of 2025, which went up a mind-boggling 23,875%. The skill to find this will be yours too, and you'll benefit from getting there far faster than you would alone. Make fewer mistakes and profit greatly on the way. Now, this skill that I'm talking about is a skill for one reason. No one can perfectly predict which positions will become 100x returns. If we could, we'd only invest in those. But the greater your skill, the higher the chances are that you'll find those gems in the rough. The key to doing this is to maintain a disciplined position across many opportunities that meet our criteria, knowing that a few will generate returns that dwarf all the losses combined. Now, I want you to hear directly from one of our members about her experience applying this framework. Anastasia joined Decentralized Masters without prior crypto experience beyond buying some Bitcoin on Coinbase. She attended Gems Uncovered sessions, learned our framework, and started participating systematically in native markets.
I mean, this has made me, 100 times? 100x? So you can imagine that dozens of coins get launched all the time. And DM called it that early on. So I got on it when it was on average between 20 and 40 cents, 30 cents. And today I looked at it, it's $3.75. So I've done very well with it. What I know is that these guys are out to educate the masses about a system that is really not going anywhere. So there's a lot of support right away. I feel like my hand is held every step of the way.
What Anastasia demonstrates is that these aren't theoretical returns available only to professionals. Real members applying systematic frameworks are achieving real results. Not every pick works out. Anastasia will tell you about losses too, but the overall mathematics favor disciplined participants. The results discussed are not typical and should not be expected. Success does require significant time, dedication, and effort, with no guarantee of similar future returns. Past performance does not guarantee future results. This is educational content only, not financial advice. Always do your own research and never invest more than you can afford to lose. The key to successful native market participation isn't finding the one perfect investment. It's understanding the mathematics of asymmetric risk-reward and positioning yourself accordingly. If you invest $1,000 each in 10 native market opportunities following our framework, your total risk is $10,000. Based on historical performance, you might expect 1 or 2 to fail completely, 5 or 6 to generate, modest returns, 2 to perform exceptionally, and possibly 1 to generate life-changing returns. Let's model this conservatively. 2 positions go to 0. You lose $2,000. 5 positions gain 50%. You gain $2,500. 2 positions triple. You gain $4,000. 1 position returns 10x. You gain $9,000. Your $10,000 becomes $23,500, more than doubling despite only 1 exceptional performer and 2 complete failures. This is simplified, but it illustrates the concept. You don't need every position to win. You don't even need most positions to perform exceptionally. You need disciplined participation across enough opportunities that mathematics works in your favor. If systematic native market participation can generate these returns, why doesn't everyone do it? Well, there are several reasons, and understanding them helps you avoid the same pitfalls. First, most people never access native markets. They wait for tokens to appear on Coinbase, buying after the major gains have already occurred. They literally don't know these opportunities exist until it's too late. Second, those who do access native markets often lack systematic frameworks. They chase tokens promoted on social media, buy based on hope rather than research, and inevitably they lose money. Without process and discipline, native markets are just expensive gambling. Third, even those with access and frameworks often lack discipline. They over-allocate to single positions. They hold losers hoping for recovery. They sell winners too early from fear. They let emotions override a systematic process. Fourth, many give up after initial losses. They hit their first zero and quit, not understanding that losses are part of the mathematical model. Professional venture capitalists expect most investments to fail. It's a few winners that carry the portfolio. These results aren't guaranteed for anyone, but they demonstrate what's possible with systematic participation. If you want to participate yourself for similar outcomes, here's exactly what's required. Attend every Gems Uncovered session. These happen on Thursday at 7 p.m. Eastern. RSVP through Circle. Show up live, not on recordings. Ask questions. Understand not just what we're analyzing, but why. The education is more valuable than any specific pick. Start small and track everything. Your first 10 positions should be tiny, $100 each or less. Document your thesis for each entry. Track performance weekly. Note what you got right and what you got wrong. This deliberate practice builds pattern recognition faster than any random participation. Maintain strict position sizing discipline. Never more than 10% of your total portfolio in native market positions. Never more than 1% in a single position. This isn't conservative, it's mathematical optimization. Winners can still transform your portfolio while losers can't destroy it. Accept that losses are part of the process. Your first zero will hurt emotionally, even if it's financially insignificant. Your second will sting less. By your fifth, you'll understand it's just mathematics. If you can't handle losses emotionally, reduce position sizes until you can. What makes native market participation powerful isn't individual wins. It's the compound effect of systematic participation over time. Each successful position funds more opportunities. Knowledge compounds as pattern recognition improves. Network effects develop as you connect to other systematic participants. After 6 months of systematic participation, you'll recognize patterns that took us years to identify. After a year, you'll spot opportunities independently. After 2 years, you'll have your own track record demonstrating what works for your risk tolerance and style. But this only happens with consistent participation. Sporadic engagement doesn't build expertise. Random token selection doesn't create edge. Hope isn't a strategy. Success requires systematic process applied consistently over time. Now, before you get excited about these returns, let me provide some sobering context. Past performance does not indicate future results. The next 2 years might look nothing like the last 2 years. Crypto markets are cyclical, and periods of easy gains are followed by brutal corrections. Many projects that generated huge returns for early participants later went to zero. If you didn't take profits systematically, paper gains evaporated. This is why we emphasize taking profits into strength rather than hoping for infinite appreciation. Taxes can destroy returns if not managed properly. A 100x gain might only be a 50x gain after taxes. Every trade is a taxable event. Document everything meticulously. Consider tax implications before trading. But most importantly, never invest money you need. Native markets are volatile beyond what traditional investors can imagine. 70% drawdowns are normal. If you need the money for life expenses, it doesn't belong in the native markets. The numbers don't lie. 515 picks, 86% win ratio, 344% average peak return. Remember, all investments involve risk. Past performances are not indicative of future results. No returns are guaranteed. This is educational content only. But here's what matters more than the numbers: the system that created them. While others chase pumps on Twitter, we use systematic research. While others buy after tokens moon, we identify opportunities months early. This isn't luck. This isn't insider information. This is what happens when you apply venture capital level research to crypto's most explosive opportunities. The data proves the system works. The question is, will you use it? Your native market education is complete. But now, you have the tools, the knowledge, and the track record. Congratulations for completing this very important step.